Ladies and gentlemen, welcome back. Episode 34 with Coby Hakalir. Coby, thanks so much for coming back. We had you on several months ago. Unfortunately, I don't remember where I was. I wasn't actually here for that episode. But since we did your background and all of that before, I don't know that we need to dig into that too deeply today. And we can pretty much just jump into the discussion. But before we do that, in case there's anybody watching who does not know Coby, although I feel like everybody who knows the three of us probably knows who Coby is. Do you mind just talking a little bit about T360 and what it is that you do at T360?
Yeah, I mean, I don't want to go too deep into it because I don't want anyone at T3 to start questioning what it is I do there. I do a lot of stuff. I'm very, very busy. But I think we got to.
Best consultant ever.
I do a lot of stuff. I'm very busy.
Nobody knows more about consulting than I do. I think we got to call attention to the fact that I'm here live with one of the hosts, and also maybe that we just lost Mace. Oh, there he is.
I don't know what's going on. Mace is doing over there. So
yeah, PK and I'll get into that in a second, but PK and I have been talking about, there's this really great Chinese restaurant, hole in the wall place here downtown San Francisco that I've been wanting to go back to for a long time. And PK and I have been talking about having lunch together, and we had this lunch scheduled a little while ago, but he was under the weather. So I said, hey, why don't I come down and do the show live with you, and then we'll go out to lunch. So the sooner we get this done with, the better, because we're very excited about dumplings and Chinese food at I call the place Dirty Dumplings. I don't even know what its real name is, but we'll find it once we get off air. So T3 is one of the biggest, or the biggest, strategic advisory firms in the real estate industry. We are the Stratmore of real estate. We're a big platform. We do a lot of research and publication. We put out several books a year. We've got some major events that we put on. We've got a big leadership summit, a big tech summit. We do talent placement. We hire people. And we also run events for other companies, and we do a lot of public speaking. So our audience is everything from, so I run the mortgage banking and core services vertical. So I work with a lot of real estate brokerages and mortgage banks that either have core services such as mortgage, title, insurance, or want to stand them up. And then I work with a lot of tech companies in mortgage and in real estate, prop tech and mortgage tech companies that are looking for all kinds of help, whether it's, pre-seed funding help, pitch deck revisement, go-to-market, product market fit, all those kind of things. So I do a lot of work across the gamut with a lot of different kinds of companies, which is cool because it keeps me interested.
There you go. Nice. Okay, I have a quick question for you. You are, I would say, you're one of the more informed, if not most informed, voices on LinkedIn. Like, you do a phenomenal job of really, having your hand on the pulse of everything that's going on. What is your how do you keep up with that much news? And what are the sources that are your sort of key go-to sources?
Yeah. Well, like I said, I'm very, very busy. So finding the time is a challenge. Thank you. I appreciate that. I draw information and inspiration from a lot of different sources. There's some great trade publications. We happen to have one. Our sister company is realestatenews.com, one of the most successful outlets out there. But I love National Mortgage News. I read Housing Wire. I spend a lot of time on Twitter, and obviously I spend a lot of time on LinkedIn learning from my peers. One of the most impactful journeys of my professional career has been the LinkedIn journey, not for what I put out there, but for what I receive from all the people that are putting out fantastic content, including the people that are on this call. So I find it to be a great place for civil discourse, for information, for absorbing knowledge. And generally I have a tremendous passion for our industry and for all things housing services. I love. Yeah, Mace just keeps popping on.
I don't know what Mace is doing today. Hey, Boomer, do you know how to use tech?
He'll figure it out.
It's just the internet going in.
So I have a voracious thirst for knowledge of our industry, and I like to absorb that, and what I put out is, really, I try to think about how I really feel about an issue. I give myself time to absorb things, to digest things, to think about, what my perspective really is. And I used to kind of be knee jerk to a lot of things that I would see out there. And then over time, as I got older, I started to, say, hey, let me think about that for a few minutes, what that really means and what the implications are. And that's really my LinkedIn. Position is I come out having digested and thought about something and say, okay, this is how I feel about it. You may or may not agree with me, but this is my position, and I would love to have a robust discussion. And there are many times where I put something out where my position changes after listening to the reaction of what people have to say about it, which I love, right? It's learning, it's evolving, it's getting smarter.
Wait, can I ask you a question there? So I was watching the video with you, Greg, and Brad on the credit report example for topic, right?
Yeah.
So I don't know if all three of you guys align. I think Greg had a different position than you did.
Yes.
My question to you is like, what's like a framework when you look at something like that? What's like the framework you use to kind of like break down that problem and come to the conclusion you come to? Because you came to a different conclusion than he did, but like to understand what are like your principles or like frameworks you use to think about it? Like, whether it's that topic or some other issue.
That's a great question. I like to think about things like what's best for the consumer and what's best for the industry, right? And often those align. Sometimes they don't. But really, we're in an industry that's built to serve the consumer. Right? Like we don't have a business if we don't have people taking loans from us to buy homes or people engaging real estate agents to find homes and sell homes. If we put the consumer first and we think about what's best for them, that's usually the framework that I put it in. Industry framework probably comes second because again, if we're not doing what's right for the consumer, if that's not our North Star, then what are we doing this for? So when it came to the question of tri-merge versus single pull and how we tackle that problem, to me, while the single pull is rife with issues and questions that have yet to be answered, it's still pushing innovation forward. It's still moving the ball down the field a little bit, and it's getting to a better solution. And the opposite of getting to a better solution is complacency and doing nothing. And I'm very much against that. And I love the fact that we have these discussions in our industry, and I love the fact that we have these push and pull discussions about how do we move forward and what problems arise if we move forward. I think those are all important discussions to have.
Okay, can I ask potentially a really dumb question? Why? Okay, so there's three. Well, no, but like it doesn't. I mean, you just stop and apply logic, right? Remember, I come from the capital markets. I've never spent a day originating a loan or anything of that nature, right? And I understand how a credit report works, obviously. But what makes no sense to me whatsoever is why there's three bureaus and they don't friggin' agree with each other. Like I've never understood how you get three scores. And I get like if it's like 720 to 715, like that's one thing, right? But like this whole like 720 to 650 spread on two scores. Because to me, it's like, is there, and I guess this would be the bigger question, right? Is like, is there a superior score? And therefore, the single pull can be on what is that superior score? Because aren't we all working with the exact same data? Like, no, and why not?
Some of them only, some certain creditors and certain debtors report to certain agencies. They don't all report to all of them.
And therein lies the rub, because the scores are not
just a problem.
The scores are not generated by the bureaus. The scores are all generated, they're run through FICO's scoring model. And so the scores are run based on the data that those bureaus are ingesting. And it's not mandatory for any lender out there or any creditor or anybody to report to any single bureau or to report to any. Reporting to a bureau is leverage, right? That's the leverage I have as a creditor to say, if you don't pay me, I'm going to report you. It's my choice whether I want to report you to one, two, or all three of the bureaus. Or there are other bureaus out there that do the same thing in other industries. They're not the only bureaus in the world. They're the only bureaus we focus on. But the scores are all run through FICO. That is the oligopoly that the three credit bureaus have, and that's the monopoly that FICO has over our industry. And that's really what we're fighting against is how do we drive the cost down by introducing more competition into the mix? And I understand there's a lot of problems associated with it. There's a lot, and all of that is within the construct that we've set up, right? We've set up this construct of LLPAs, we've set up this construct of the GSEs, we've set up this construct of FICO. The bureaus have Vantage Score, which we've not yet adopted. That's a potential solution. So all of these things are a problem that we over time have put together as solutions to our industry that we now have to find a way to deconstruct and unwind and shift the paradigm to something else. If you remember, 30 plus years ago, there was no credit scoring. You had the data,
Right.
and you made decisions based on the data. And the reason that you had credit reports that had to come directly from the bureaus was to prevent fraud coming from the consumer, so you could verify what the consumer was telling you about their credit. Prior to that, there was a whole hodgepodge of different ways to verify things. And the reason that the consumer didn't own the credit report back then was because you couldn't trust the consumer to own their own credit report because of all the fraud that could come into the mix.
Right.
We are so far past, what we used to do 30 years ago. And the easy answer is to cling to what we used to do because that's the solution we have in place now. And the idea of doing something else seems cumbersome and difficult. But we've changed how we've done business many times over the last 30 years. Think about how we've changed how we did business after the Great Recession. Think about how we had to change how we did business during TRID. There is no reason that we can't pivot again and do business a different way. And each of those times, it produced more transparency and it lowered costs, but it came with a good dose of pain. But that's okay. Change does. So that's my position here: is what's best for the industry, what's best for the consumer. What's best for the industry and best for the consumer is more competition on the vendor side, which includes the credit bureaus, and goes all the way down the line. And that's why this is an important conversation to have, because ultimately we need to bring down the cost of manufacturing a loan.
It seems like there's a huge need, though, also to centralize the data, right? Like ultimately at the end of the day, because this, to your
Want
point,
to get better at centralizing the data, make the credit bureaus compete. If they're competing, I guarantee you this discrepancy that they have, and they love to talk about the fact that, hey, each of us are incompetent, so you need all three of us. But if you want to make them compete, if you want to see the data improve, you start making them compete with one another, and you will see lightning advances in the data that they have to provide.
Yeah, there's a bunch of things out there. Or they're called CRAs, credit reporting agencies.
The credit reporting agencies are the intermediaries that work in between the credit bureaus and the lenders.
Got it. Okay.
All right, there you go. Okay, with that jumping from there,
Well, hold on.
Coby-
How would they?
Oh, go ahead.
How would you propose they compete, Coby? Break it down for a 5-year-old.
Yeah, well, I mean, if you went from a tri-merge to a single pull, and you had your choice of which credit bureau to use,
Oh,
right?
there
Then
you go.
and the one that had the best data and the best modeling and the best service, that's the one that's going to win out the day, right?
Got it. There's the pro and the single pull. Got it.
That makes sense. And you're probably doing some head-to-head testing, right, on some of your loans. Like if now all of a sudden I can say like, okay, 5% of my loans, I'll do a tri-merge. So at least I'm keeping my pulse on who has the best data. Although I'm sure that gets all sorts of squirrely on that as well. So it'll be interesting to see. I mean, I when you broke it down a little bit for me, a few weeks back, and I didn't realize how much of a problem it really was from that perspective. So hopefully there certainly is a lot of attention on it. So hopefully that results in something. It'll be interesting to kind of see what goes down there. So, you do talk a lot about tech reshaping, mortgage and prop tech. What's one innovation that you generally think is going, or is moving from buzz to real business impact that we're seeing right now? And then what is one that you feel like is just pure hype?
I've seen a lot of progress with the document reading vendors, the vendors that allow operations staff within a mortgage company to ingest and read documents and extract information from them. I've seen that improve exponentially, I would say, over the last 18 months. The not seen improve exponentially over the last 18 months is the lender's ability to implement and adopt that technology. And that's because, for the same reason that we can't get past the tri-merge versus single pull conversation, and that there's always reluctance to change the status quo. If you have a workflow that relies on X amount of people within a mortgage operation, there's going to be natural reluctance to say, hey, I'm going to cut my workforce, or I'm going to repurpose my workforce and put a whole new workflow in place that now, even if it creates efficiency, right? I am nervous about changing the way I do things. And a lot of that the reluctance comes from startups that have this technology that a mortgage company is supposed to invest a bunch of time and money in. And, do we know if that startup is going to be there in 2 years to support you? And then what do I do then? Where do I pivot? Now I've lost really good people who have been with me for a long time. I don't have any support for the technology that I'm being asked to implement. So how do I make this change with confidence? So I know that's more than the question you asked, but that's where I've seen the most innovation happen. With that, I've seen a lot of innovation. And you asked, what was the second question?
Just what's one thing that you feel like is just hype right now?
Oh, agentic voice. I feel like there is so much hype around agentic voice, and this ability for a customer to call and everybody does the same demo where it's like, oh well, 5 customers tried to ask it out on a date, and it's like, why are we in the business of trying to trick people with somebody that sounds human? Why can't we just why are we trying to create an experience that seems authentic when in reality it's inauthentic, as opposed to saying, hey, I'm your AI assistant and I'm going to help you on this journey. On the flip side of that, the companies that use agentic voice to reach out to customers and bombard them, what does that look like in a few years from now, when everybody from the refrigerator repair guy in town to the plumber to the local caterer decides to bombard everybody with an agentic voice, and nobody's picking up their phone anymore because every time you answer it, it's going to be some robot trying to sell you something.
I don't answer my phone. Like I have the setting on my iPhone where if you're not in my contact list, you can't even call through. Like it doesn't even ring. It just automatically it's like as an AI that like screens them out.
Remember whenever PK, when we were in New England, and he was like, I wish there was a way to make it so that people who weren't in my contacts go to voicemail. I was like, here's what Andrew.
That was PK's boomer moment.
The new iPhone set allows you to do that. You can put
that's what I'm saying.
Yeah, exactly.
And what we're not paying attention to is that the younger generations, who we should be paying a lot of attention to, and we consistently ignore, the Gen Zs, the Gen Alphas, the Millennials, they're not going to answer their phone. So if you think the future is having a robot call these people, that's not going to land. It's going to literally land on deaf ears. The opposite of that is if you have that as your customer service setup, right, and it's working well, yeah, that's a benefit. But this notion of we're going to pretend it's a human and try to get people to think it's a human. Well, why are we doing that? Like, why aren't we creating authentic experiences for people and say, hey, I'm your AI voice bot, and if at any time you would like a human off ramp, just press 0 or just tell me, right?
I think Jeremy Potter had a great take on this. Now, I think where voice makes sense is inbound. I'm not sold on outlet, just like you. I'm not sold on outbound voice. Inbound voice, though, I thought Jeremy had it perfectly, which is give the customer the option. When you call in, let them know, okay, if you want to talk to a human, it's going to be 15 minutes, or you can talk to an AI voice agent right now, right? Like for me, it's like, well, I'm going to at least I don't want to wait 15 minutes. So I'm going to at least give the AI voice agent a shot and see how it does. And to your point, if there's an off ramp and it sucks, and then I just hit 0 and then, I wait 15 minutes. But it is going to be interesting as we see this whole, AI is talking to AI. I don't know if you guys saw this. There's a little while back where the guy made so apparently Comcast has AI voice agents now when you inbound call, and a guy built a voice agent to argue with Comcast's AI voice agents, and you can just have the voice agent call on your behalf to argue your bill down. And so I thought it was so hilarious that now we have 2 AI voice agents arguing with each other, and there's no human.
I have robots fighting robots.
Curious, if you were given the option to talk to a human immediately or to an AI agent first, and he thought you had a run-of-the-mill question, would you choose the AI agent first or the human?
Always the human.
Me too.
I want the AI agent first.
No, I travel quite a bit, and that necessitates some phone calls to United to try to change flights and move things around and such. And anytime they offer me the AI robot, either texting, I'll wait for the human, even if the human is outsourced to God knows where and like has no idea where I am or who I am and doesn't care about my complaints. It's still a human being that has some autonomy to help, and I always prefer that. And maybe that's the generation that I'm at, and that might be a different answer for my kids who are Gen Z. And I have a Gen Alpha kid too, but maybe it's different for them. I feel like we need to meet people where they are, and where they are right now is there's a little bit of a lack of trust in our industry, and I think we need to build up that trust before we start putting robots on the front lines.
Yeah, I think that's the biggest part where you just said being where they are. Like if I had a complex issue, I want to talk to a human, but if it's like, where are my bags? It's like just using an airline for example. So anyway.
And customers have said in study after study, the younger customers, which is the ones we should be focused on again, that they want a digital experience with a human off ramp, and we need to provide that for them. And that's the future of where our industry is going, is to have as much digitized as possible, but then to be able to give them that support and guidance when they need it, when they ask for it.
Well, and I think to your point, on the trust factor, right, is, and I've been saying this for at least over a year, when everybody was like, hey, I was going to replace LOs. And I was like, nope, not even close. Like what I see happening is that the AI will empower the LOs to be able to spend more in-person one-on-one time helping to rebuild that trust, right? From that perspective. And if you, go ahead.
I was going to say, if you think about it, buying a home, financing a home, you're going to buy a home 3-4 times in your life. You're going to refinance maybe a few times more than that, right? This is not something that nobody is looking at a mortgage loan process and saying, man, I wish I could just do it from my phone and go through the entire 3-4 week process alone with no help from anybody. Nobody's saying that. Nobody's putting their hand up and saying, I don't want that guidance. I don't want that help. I mean, we had an issue on the real estate side of the aisle a little over a year ago, or almost a year and a half ago, where the real estate realtors had to start disclosing their commission on the buyer's side, right? And everybody thought, well, they're going to stop using buy-side agents. The commissions are going to get compressed, and that entire half of the business, if you look at the listing side versus the buyer side, is going to just basically fall to the wayside. It never happened. We've done countless survey and countless study, and it showed that commissions not only didn't go down in the wake of that mandate for transparency, but they in fact went up a little bit. People do want that help. They do want that guidance, and we need to start leaning into that and stop moving away from, the customers just want to work on their phone and they just want an app, and they're not interested in buying, and they're not interested in this, and they don't want to buy a home anymore. We have these kind of myths that we live with on a daily basis in our industry, that if we keep believing in them, we're going to miss out on just a huge segment of the population. And yes, we have issues with affordability on the demand side and inventory on the supply side, but we've got to start acknowledging that the younger generations do want to buy a home and that they do want our help.
We also have a house size problem. I feel like this isn't talked about quite enough, right? Is like, no, like I just look at like where I live, right? Like we have a housing shortage. We have a massive labor problem. Like I needed to get somebody to come out and fix my dishwasher, and it was like I had to wait like 3 weeks or some crap because there's just nobody to even do the work, right? And
there's like a billion people that don't have clean drinking water in the world.
I listen, I'm aware of my first world problems. I had to hand wash dishes for a couple of weeks. I didn't know what I was going to do with myself.
I want to point that out.
Like we don't see, like I remember this is a few years back. I sold. I had, when I moved to Fort Wayne, I bought a small ranch. Right, it was single dad. It was just me, the 2 boys. I didn't need anything big. It was like 1,200 square feet, something like that, right? Those just don't exist anymore. I went to sell that house, and I had the most insane bidding war on this 1,200 square foot ranch. And I remember asking my realtor, I was like, what in the hell is going on, right? And she was like, there's no inventory of these homes, right? And I look at we've got 4 neighborhoods going up, you know, within a few blocks of where our neighborhood, and our neighborhood's fairly new. In like literally, I think the smallest home in these neighborhoods is like 2,500 square feet, right?
Yeah.
And that to me seems to also be part of the problem. Is these builders keep building these 2,500, 3,500, 4,500 square foot homes, and we just don't have that inventory of smaller homes because they're trying to. I mean, I assume they're just trying to maximize, you know, their revenue per lot, right? But it's a real problem.
Yeah, I mean, you know, show me the incentive and I'll show you the outcome. The builders are not building it necessarily because they're trying to maximize their profit. They're trying to build it so that they can stay profitable. We've created a system in most urban areas in this country where the permitting, the zoning, the labor laws, all of those things make it very prohibitive for builders to build smaller starter homes for first-time buyers that they can afford. That's part of the supply problem we have. So if you're looking at what builders are building, they're not building something because they're trying to build the biggest house they can to sell it for the biggest ticket item. Remember, the bigger the house you build, the smaller your buyer pool. They're doing that because that's what they can afford to build and still stay in business.
Right. That makes sense. I mean, the neighbor, I mean, just, you know, as a, you know, a little bit of evidence on that, the neighborhood where we built our house 3 years ago, the builder didn't even finish the neighborhood. Like they were losing so much money, they actually ditched on the neighborhood. Thank God another builder came in and bought up the remaining lots. But that particular builder left the state of Indiana entirely and is no longer even building homes in the state of Indiana. So something's got to be done there for sure.
I just met with my state senator and my House representative on Sunday, and we were talking to one of the bills they're working on is actually to be able to take some infrastructure money and be able to, there's like an area over here near Salt Lake that they've got it zoned, but there's no infrastructure there. And so they want to be able to, like, you know, subsidize getting water and all the things out there to facilitate that building. But then that same city also had some interesting minimum requirements, and they had to basically, you know, work with the city to be like, you have to lower your requirements, and we are going to put caps on, you know, if you're going to take our money, you can't just build McMansions. And so we did have to actually kind of fight that with the housing czar, the lieutenant governor and the housing czar, to kind of be like, hey, you want infrastructure money, you have to take away these minimums.
Damn, Mace. Most people are watching football on Sunday. You were pulling the lever.
Yeah, right. I was.
Don't get me wrong. I did that, and then I went to a brewery for my birthday. It was my birthday. So.
Happy birthday, by the way. I didn't.
You're like Ben Franklin.
Late to the game on that.
Did I miss, Chris? Did I miss your birthday?
Yeah, we both did. Yeah. We both just dropped.
Coby messaged me.
Oh man.
Coby's way more organized than PK and I, clearly. There's shitty friends you have.
24th?
25th.
25th, okay. Noted. I won't forget it again.
62? No, I'm just kidding. Do we want to talk, by the way, I mean, hot off the presses this morning, do we want to talk about the Rocket lawsuit?
I don't even know about it.
Your show, man.
Huh? I'd love to get your take on it. These are the things that, like, I find really fascinating because it's, you know, like, I don't know how much of you looked at that this morning. I don't want to, like, put everybody on the spot. Chris hasn't seen it at all.
I briefly saw it.
I mean, basically, as I understand it, I mean, it's the same law firm that sued NAR and won that one. They've also got a lawsuit against Zillow, and apparently these folks don't lose lawsuits. Like they don't go after stuff that they're going to lose. That's what I read.
Class actions are, you know, they're tough to beat just because of the immense pressure behind them, and so often they come to some kind of settlement if it's done correctly. And this firm seems to specialize in that. You know, the outcome of these suits, you know, will still be determined. There's 2 against Zillow. There's 1 now against Rocket. And the conversation about vertical integration and steering is, I think, going to be prevalent this year. I don't want to give too much attention to the vultures that circle our industries and put together these suits, but I do want to say that this is kind of this is one of the pain points of moving an industry forward. We're trying to get to a point where we have this one funnel and this elevated customer journey. Whether or not Zillow is doing it correctly or Rocket did do it correctly in the past before they took on Redfin, that's for the courts to decide at this point, or for the lawyers to hash out. But that's the goal. The goal is to kind of create a better customer journey and what's best for the customer. Our industry needs to figure out how to do that by staying well above the fray and way above reproach, right? We are at our most transparent point in our industry's history. Everything around our industry is at its most transparent point, right? We had TRID 10 years ago, so we have LEs, we have customers that understand the cost of everything. We have realtors that need to disclose their commission. There's a ton of transparency. Are we where we need to be yet? No, but we're getting there. In order to stay above, both government reproach and when the CFPB eventually does come back, and they will in the next administration, I'm sure, or the one after that, or state regulators or lawyers that are constantly looking at our industry and trying to find weak points with which to insert lawsuits, we can control most of that by providing the most transparent process to our customers that's possible, by elevating the amount of clarity, elevating the amount of transparency, saying, hey, this is the relationship that we have if we're a Zillow agent, or this is the relationship that we have if we're a Redfin agent, or the other servicers that have similar agent incentives. So I think it should be taken as a wake-up call to our industry, and a gentle reminder that there are those out there in the legal field that wish to do us harm. And if we operate understanding that, and we still, again, do what's best for the customer, I think we'll come out okay. It's when the incentives are misaligned, or when the customer comes out, even if they come out just as well as they would have otherwise, but if the incentives are hidden or misaligned, that's when we get into trouble.
Right.
I do think it is difficult also from the mortgage banks out there, and the net branch model is a difficult one to, like, from Momentum, my mortgage company, it was difficult to, just turn down branches. They're just like, no, we're not going to do that. And so, like, so often I hear the phrase, and it gets under my skin a little bit when they're like, our customer is the customer and our customer is the loan officer. And I agree with the sentiment, but I think it can sometimes take over. Anyway, there's my rant on where our focus should be, is really the customer.
What I was curious is it feels like there was so much talk for a while of this sort of vertical integration, right? Of like we with Rocket and their acquisitions, and we've seen others of a similar note, is whether or not we think settlements like this may risk, coming back to public confidence, right? Like, if I'm outside the industry, and again, I'm not saying that what has been said about Rocket is true. We don't know that. We need that all to take course, right? But if it does turn out to be true, does it now put a little bit of a stain in the public of wanting to avoid any of these like major, vertically integrated organizations, right? Am I now more likely to go to my local smaller IMB or credit union or something of that nature?
Maybe. I don't know how much the public pays attention to a class action lawsuit around a RESPA violation. I don't think it's very much on their radar, especially when you look at what's in the news today. Take your pick, and like how far up is the Rocket RESPA lawsuit. But I do think it has implications for our industry. I do think we need to pay attention to it internally. We need to safeguard our own. What I hope it doesn't do is, not from a customer deterrence, but from an industry deterrence standpoint, what I hope it doesn't do is deter people within our industry from going down the vertical integration route and finding this better customer experience and understanding what to do around owning the funnel and how that may impact the customer positively from a cost standpoint and from a value standpoint. To that, if I could just give a quick plug, this Thursday, Garth Graham from Stratmore and I are doing a webinar on vertical integration, why now, and what the future looks like. And there's going to be a 4-part webinar that follows. But this Thursday, we're doing an intro to that. If you want to hop on to that, I for sure have a couple of links on my own LinkedIn page for you to follow and go to. So that's Wednesday. I don't remember the exact time, but I'm sorry, it's Thursday, and I don't remember the exact time, but it is Thursday. I have the date right.
All right, we'll take a
That's
look
exciting.
for that.
You know, and we are talking about it because it is timely. We're seeing a lot of instances of the industries coming together, you know, and not just the Rockets and the Zillows, but we're seeing it on a lot of different levels. We're seeing companies that are entering into the JV market with both feet. We're seeing companies that are granting NMLS licensing on both the state and federal level to real estate agents and trying to take advantage of that. So it is happening, and it's happening out of necessity, and it's happening because it's best for the customer. So my biggest fear is that these lawsuits don't deter people within the industry from acting and doing what's best for the customer. Not so much the public that, you know, they see that, you know, RESPA lawsuit, class action, Rocket, Zillow, and like it's word soup to them.
Right.
Number you can short.
That's
Well,
true too.
and to your point, like, I mean, every morning I just Google the word news. And I'm pretty sure Rocket's never coming up in that list. So that's
Hold on.
definitely.
You Google the word news.
Yeah, every morning it just tells you like immediately. Then I'll hit like I'll hit actual websites, but I'm always curious to see what are the 6 leading stories in the country.
Boomer.
Oh, yeah, that's Boomer one as well. There you go, ladies and gentlemen.
Can you screen record that tomorrow?
Coby, from here on out, I'm just going to screenshot every morning the top 6 stories.
By the way, it is next Thursday at 10 a.m. Pacific time.
It's this Thursday.
Oh, this Thursday at 10 a.m. Pacific time. I went to your LinkedIn for you.
There you go. Thanks. Thanks, Mace. What are you seeing? What have you seen? Kind of coming back to the tech space. You know, one of the things that I'm noticing is, you know, we've talked to a lot of folks who seem like they're a little bit underwater in terms of, you know, the tech initiatives. There's a lot going on in the space. And I feel like I'm hearing from a lot of people who are doing LOS switches. More than, you know, I've ever seen personally, just through conversations. What have you kind of been seeing around that front?
I'm not seeing as much activity as I think you might be seeing. You know, I think Encompass still dominates. You know, there's still 80% market share. I see entrants into the space that are trying to gain a foothold. And again, it comes down to what I said earlier. I'm used to doing Encompass. It's got all the integrations. You know, it's so embedded in our organization that I don't even know where to start. If I wanted to switch, what kind of contract is that going to take? Are you going to be around in 3 years to support it? All of those same things. You know, there's a reason that Encompass, and you can say what you want about it, positive, negative, but there's a reason why it has the foothold that it has, because switching away from it is so difficult.
Right.
You know, one of the, you know, I mean, but, you know, does that have to be forever? No. You know, I think as our technology evolves and more entrants come into the market, is there going to, you know, be a little bit of a diversification? I believe so. Think about, you know, what it used to take years ago to switch insurance carriers on your car or on your house. And you can do that now. By the time we finish this episode, you could have a whole new car insurer, right? Just from your phone.
Right. Right.
So not that that's super analogous, but the point is that situations where change is difficult and change is cumbersome, those can be overcome, and with the right intention and the right amount of money behind it too. So I think we'll see. I think we'll see Encompass continue to dominate, but you know, I perhaps go down to 65% market share, 60% market share over the next 5 years. There are going to be some people that are continue to chip away at it, Vesta and Meridian Link. You know, and I know that there are some big POS, Matt Van Vossen. I know that he's got a good product that he's put out there. So there's going to be some diversification around it for sure.
Well, and we've seen some pretty heavy hitters money wise. I mean, I cannot think of the name of it right now, but there's a Peter Thiel backed LOS out of New York City that's also entered the market, which I thought was interesting that was where someone was going after, because to your point, it's not for the faint of heart.
You think
Trying to, huh?
Thinking of Pylon?
Pylon. There you go. Thank you.
Yeah. I think they're here. They're in like South Bay.
Huh?
They're in South Bay. They're not in New York here.
Oh, they're in both.
Oh, okay. I didn't know that.
They have offices. That's right. They have offices in New York and offices in San Francisco.
Ah, okay.
So I think like part of their executive team's in New York and part is in. And they're taking an interesting approach. I mean, they're taking an interesting approach the way they're going about it. It'll be interesting to see, how they do. But I think to your point, Coby, it is just such a difficult space to sort of tackle into. So, so what are, kind of continuing on the AI front, what are some other, use cases that you are seeing that seem to be kind of top of mind for people? I know when if I had a nickel for every time someone asked me about voice agents, I would be retiring. That does seem to be like everybody's hot item, but to your point, I don't know that we're really, I have yet to see it. I'm not saying there aren't any out there. I'm just saying I have yet to see a demo of one where I was actually impressed by it. So I don't know if it's, just for whatever reason, that's the hot topic. But what are, some other areas of AI use that you're seeing that people are, live and working with outside of voice and document extraction?
First of all, I am impressed by, robot AI voice conversations. I think that's pretty cool, right? Like the fact that a robot can talk to you and ask you how your day is, and you can say something crazy and it'll respond appropriately. Like, I think that is pretty cool. I think the technology is super cool. It powers that. Like, but I challenge the use cases of it more so than I challenge the innovation of it. I think it's super impressive. Different cases of AI uses. I think what you guys are doing at Ask Bob, I like your product, to give you a little bit of a plug. But I think anything that makes the loan officer's job, easier, right? In terms of structuring the deal, in terms of pricing the deal. I mean, these are things I remember when I started as a loan officer in 1997. You would have, guidelines from the lenders that were each this thick. And if you wanted to know what the max DTI was and how many months of reserves you had to go through this whole book. This was before they even put them online, and you had to find the matrix. And then, if your thing didn't fit directly into the matrix, you had to figure out, what alternatives you had. You had to call up an account executive, and hopefully they would call you back because it was Friday afternoon and they checked out for the week. So, the days of spending so much time hunting and chasing information and resources. Even having the Fannie and Freddie guides online, like that has never, maybe it is better now because I haven't been a loan officer in a while, but I remember hunting, in the Fannie and Freddie guides online, and the search was so horrible. You would search something and, 8,000 results would come back, and there was no way to like really filter that appropriately. So the level of resources around that, where I see AI being helpful, where a loan officer who's got a tough deal doesn't have to go around polling all the loan officers in the office now, and can actually go and find the answer for themselves, and bring that value back to the customer and back to their referral source. Like, that's enormous to me, and I often think, like, man, if I was a loan officer today, like, how much time would I save hunting for information that, like, anytime somebody asked me about a weird deal that would take me 4 hours to go find the answer, and then I sometimes come up with the wrong one, to like now, I'm a few keystrokes and a couple of prompts away from finding it.
Yeah, we've got one client that's going live next week, and they've got, I think it's 30 investors, and I'm like, how does any human being how do you even understand what your offerings are, right?
Well,
it's like sort of,
you want to talk about steering, right? Well, that's what generally happens when you're working with most loan officers, and I'm not using it in a negative way. I'm saying that's what generally happens, because what winds up happening is you have 2 or 3 investors that you use all the time because their account exec gets back to you, you understand their guidelines, you've done a deal with them before and you know what to expect. And the other 25, you have no idea how to even start approaching them because, you're going down a rabbit hole of information and people that you're not familiar with. So what a great thing for the customer to have a loan officer that has all of that at their fingertips.
Right. We actually have one client who we were missing a set of guidelines for one of their investors, and they didn't know how to get them. We were like, they didn't know how to get them. Like, they just didn't know how to get them. But I can't even, I don't put that on anyone. It's the overload of information, right? And I'm still a big believer, and I use this metaphor, about 1 billion times probably, but it's like the ATM, right? Like, banks for, decades and decades didn't have an ATM, and you could only get cash, from 9 to 5, Monday through Friday. And I think people feel the same way about information, is that's how it's always been. And people are going to get to this point of expecting to be able to get information, in less than 30 seconds, and particularly complex situations like you're saying that, traditionally would have taken you 3, 4, 5 hours, like that now coming down, pretty substantially. So,
Coby, kind of switching things up. I know you talk a lot about.
By the way, I love the fact that he's sitting right next to me. This is so cool.
One day we'll do all 4 people in the same spot.
Love that.
But you talk a lot about affordability. You said something earlier, which is we should focus on the kind of like the next generation, with it's Gen Z, Gen Alpha, et cetera. We've talked a little bit about this, but the question is, are you seeing that they actually want to own homes, or are they more of like that? I'm sure you've heard the word like experience economy, where they just want to experience a home for a little bit of a period of time and then they just want to move on. Because like owning a home means a lot of work. It's like you got to fix that thing up, you got to mow the lawn, you got to do all this work to like maintain this thing. And like, I don't know how many of my friends have like that they don't think they want to use those tools and like figure things out like that. So like, I'm curious, like what your take is on that, and like if you're actually seeing that on the ground.
Yeah, I think painting entire generations with a broad brush is a mistake that we often make, right? I think people within, PK, you live here in San Francisco, right? And are you thinking about buying right now? Maybe not. But, is someone who is your peer that lives in the suburbs of Colorado maybe thinking about buying a home because they're at a different stage of life, even though they're the same age as you?
Sure.
I think people evolve just like we did when we were younger, that you go through your different stages. You go through college, you get your first job, and maybe you get married, or, you have a girlfriend or whatever it is. But I think we're painting too broad of a brush, the saying that all young people want to live in a roommate situation and they want to move cities every year. That's true for some. And the way that our economy is set up right now, it's a necessity for some and it's a luxury for others. But to paint with a broad brush and to say people don't want to own a home because they'd rather just migrate from one place to another, I think that's a mistake that we make with tens of millions of people and analyzing what their decision tree looks like. I can tell you that for the people that do want to own homes, they're very vocal on social media talking about, hey, why can't I get a mortgage? I'm paying more in rent than the mortgage would cost me. Why can't I find a home that I can afford in the city that I want to live in? That's frustrating for me. Why can't I find a loan officer that can explain the process to me? Because I'm scared, because I saw my parents lose equity in their homes 15 years ago when I was a little kid, and now I'm terrified of the process and I want someone to explain it to me. I think we have to, again, and I said this before, I'll say it again, we have to meet people where they are. We have to understand that the younger generation, the older generation always thinks the younger generation has weird ideas and they're doing crazy things and they're listening to crazy music and smoking funny, right? But who raised them? We did, right? And we raised them to have a home and a safe place and to understand that there is a value in having that stability in a home. And it's not for everybody, but it doesn't have to be for everybody. But we can't discount those entire generations because we feel like they're more interested in playing Roblox on their phone than they are in learning about the economy. Well, how much of the economy did you want to learn when you were 21 years old? How much of that did you really care about? So I think we're guilty of being judgmental of people just because they're younger and they may be living a different life than we lived back then. But if we instill the values in them, then wouldn't their values be essentially the same?
Yeah, it's funny you say this. I remember I was in the airport. This is years ago, and I was listening to this group of elderly people who were complaining about kids these days. And they were like, they don't know how to drive a stick shift. And I was like, and you don't know how to churn butter. Like you just don't need to know that like anymore. Right. And I think as a result, we've seen industries that have popped up. Right. Like, I mean, PK, to your point, like, my father's generation and partly, I think even mine, like when you bought a home, it was an expectation that you would buy all the tools. You became the handyman, right? Like you knew how to fix all the things and, whatnot, right? And then Thumbtack came along. And Thumbtack, and other, I know there's other ones out there besides Thumbtack, but, we started seeing this emergence of the on-demand handyman because I think we started getting people who it's like, I want to buy a house, but like, I don't want to fix crap and I don't want to mow my lawn. And, I mean, you go back 20, 30 years ago, like you did like having someone like mow your lawn. Like my father would, that can't even like, he can't even wrap his head around that concept. Right. Like you just mowed your own lawn. And so I think that's the other piece of it, right? Is we'll just see things sort of, change and evolve and new industries, open up as a result.
It's a different world. Just Google News.
Google News. That's right, buddy. Or you can just have ChatGPT set a task to send you the top 10 news stories every morning.
Hey, Coby, what would you like if you had the magic pen? You could, make sweeping adjustments outside of just saying lower your home prices. Like, what do you think would have the biggest impact on affordability? And I know that's kind of a tough one. Supply.
Yeah, I mean that's the big problem. One of the problems I've had, and I've called out the administration on this countless times over the last year or so, is every huge idea, and I say that with as much sarcasm as I could possibly muster, every huge idea that has come out of the FHFA or the administration itself has been demand side solutions, and to the extent that they've been actionable or not, that's a different discussion. What we really need are supply side solutions. That's the biggest inhibitor, because the more buyers we create right now, we're actually going to have a negative effect of pushing prices up. We talked about the 200 billion of MBS that was going to be bought, right? Well, that had the effect of lowering rates for a couple of days, right? But think about what happens when you lower rates. You have more entrants coming in on the buy side, but if you don't have any more supply, that pushes pricing up. So that's where I think we should have focused conversations on what do we do to get more inventory going? What do we do to incentivize builders? Andrew, to your point earlier, to build starter homes, to build smaller houses. What do we do on the lending side to create more innovative lending products to perhaps incentivize people who come together as friends and want to buy a house together and divide it by 3 and have that mechanism there so that they can exit that home when they want to and sell their remaining shares. We need to think about how we can change the paradigm that exists today where we have home prices going up without end, and we have a whole bunch of people that are locked out of that experience. And for the answer to be negative pressure on the housing industry, on the housing supply, so that prices go down enough, well, that penalizes people that already own homes. So the answer is not to devalue what people currently have; it's to add value to the market with additional homes.
So you kind of, I don't know, Mace, if you kind of stole the question from last week's guest. But Coby, the question, our question from our last guest last week came from Melissa Langdale. And it was, if you have unlimited resources, but you could only fix one thing in the industry, what would you fix?
I think I would fix the problem we have of not hiring new people into the business. If we focus singularly on hiring new and younger people into mortgage, not only would they come with fresh perspectives onto how to communicate with the younger generations, they would come full of ideas, full of solutions, full of fixes and messaging that we haven't even thought of. We are an aging population in the mortgage business. We need youth desperately. It's a good job for a lot of people that don't know about it because we don't talk about it. We don't have any training around it. And I shouldn't say none. The MBA does a nice job promoting youth in our industry. I just want to see more of it from the private sector, from the actual lenders, because we used to do it. When I got in the business, I found a way to get myself trained and somebody took a shot and hired me. We need to keep doing that. We stopped doing it after 2009, 2010 because too much of our budget was going towards compliance and we just didn't have the time anymore. We need to focus back on that. So if I had unlimited resources, I would put that into place.
There you go. That's a good one. And I'd have to agree with you. I feel like early 2000s was the last like major push that we saw. That's when I got into the industry, was 2003. And that was
maybe after we hired you. That was
that's when I graduated high school.
They're like, okay, this is clearly a very bad idea. But it's interesting you bring that up because at my last company, Canopy, one of the things that we did was we created a no experience training, and we brought in people who had never worked in the industry at all, and we started them in the collateral department, and they work, and we had a very clear, it was like you went from collateral to compliance to credit, and it was a whole career map, right? And those inevitably were our best employees, right? Who came in, they were hungry, they wanted to learn, they had a great attitude about them, they came with, really, to your point, good solutions. And I would agree, it's definitely something the industry needs to get back to. Okay, so you have a question for next week's guest, and normally we prepare people, but I don't know that did we tell Coby who he's asking the question?
Yeah.
Oh, so Coby does know who he's asking the question.
Yeah, I know Ralph, and I think I'm pretty sure that he's also in the Bay Area. So I think you guys should have him sitting right where I'm sitting next week with PK. Like, you guys should just keep, and then maybe Mace, I know you're in Colorado, right?
Utah.
Oh, Utah. That's right. Utah. Okay. I always get those two places confused. And I know where you are, Andrew. So I'm
in the tech hub.
Yeah.
Nobody will ever go to
Fort
Andrew.
Wayne, Indiana. What?
Nobody's going to Andrew.
Nobody. Maybe get like Mike Easling over at Ruoff. That would be about the only person potentially. So what is your question for Raf for next week?
I know that he's in the tech space, and I know a little bit about what he does. We've had some good discussions around his technology, Cocoon. My question for him would be, what does he think the three most important things are for engaging younger generations into the home buying experience?
Solid.
Are you writing it right now, Andrew?
Oh yeah, I am.
Look at this guy go. My favorite moment from this episode was I Google News. But I like how Coby goes, wait, you Google News?
I love how confident Andrew was too. He's like, yeah, I just do this.
Well, yeah, because here's one other reason why. Because otherwise, it's like, what do? Do you go to the New York Times? Do you go to MS Now? Do you go to CNN? Do you go to Fox? Like, I feel like when you just Google it, you get like a list of all the top stories from different outlets.
Yeah, I don't know how to even begin to help you here, man.
Where do you go?
I go to news.google.com.
I was going to say, you press the news button on Google.
Which is all you get, which is what you get if you just Google news, you get that. So I don't know why that's so different. What I really should do is I really should use task management in ChatGPT. I used to do that for tech stories. Like, I would have it email me or message me all the top 10 tech stories of the day.
Like an internal RSS feed?
Every morning. Yeah, it's right. Yeah, it's basically RSS feed for all intents and purposes. So, Coby, thanks, man. Appreciate you coming on. Glad I could give you a laugh. You guys go enjoy that. I'm jealous of this Chinese food. Send me a pic.
It's really good.
Yeah.
He asked me when I got down here. He's like, "Do you know if it's open or not?" I'm like, "I have no idea." So,
all I know is I want to open a chain now called the Dirty Dumpling. I feel like it's a great name for a restaurant.
Don't do it in this. It's my copyright, man. Don't steal.
So there you go. All right, we'll get a cut of the company has to go to Coby. So all right, guys, thanks so much. Appreciate you all, and we'll see you folks back here next week with episode 35 and Raf Howery. All right. Thanks, guys. Have a great week.